business and tax prep. We make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. For the local dreamers close by and the ones far away, we create more than a course. We create a brighter day, a community that shows up with support you can feel. We share the tools, we share the light, and make your future real. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. If you've been waiting for a sign, here it is, come on in. You've got what it takes to thrive, and we're with you to the end. For every goal you carry, for every room you want to fill, we'll help you stand with confidence and turn your vision real. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. Skills without borders, careers without limits, borderless accountants. This is what we're made for.
What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program.
From every corner you can come. Bring your story, bring your hopes. We'll meet you where you are and help you learn to grow. With U.S. books and tax prep, we make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. For the local dreamers close by and the ones far away, we create more than a course, we create a brighter day. Community that shows up with support you can feel. We share the tools, we share the light, and make your future real. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider sky. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. If you've been waiting for a sign, here it is, come on in. You've got what it takes to thrive, and we're with you to the end. For every goal you carry, for every room you want to fill, we'll help you stand with confidence and turn your vision real. Skills without borders, careers without limits, borderless accountants. We build the
What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program. What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program.
From every corner you can come. Bring your story, bring your hopes. We'll meet you where you are and help you learn to grow. With U.S. books and tax prep, we make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accountants. We build the dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it.
All right, guys. Good evening. How are you guys? Right, time check is 7 on the dot. You guys can hear me okay, correct? All right, perfect. Just making sure that we are being recorded. All right, so we are. To begin our session today, let's call on Christine to lead us with a prayer. Go ahead, Christine.
Let us put our presence to the Holy God, in the name of the Father, the Son, the Holy Spirit. Amen. Heavenly Father, thank you for bringing us together today for this online class. We are grateful for the opportunity to learn, grow, and share our knowledge with one another. Please guide our instructor as they teach and give us open minds and focused hearts as we listen and participate. Help us understand the lessons, ask meaningful questions, and apply what we learn. Bless everyone in this session with patience, wisdom, and understanding. May our time together be productive, engaging, and meaningful. Keep everyone safe. Guide us throughout the session. May everything we do today be successful and pleasing in your sight. In Jesus' name we pray. Amen. In the name of the
Amen.
Father, the Son, and the Holy Spirit. Amen.
All right, thank you, Christine. All right, I hope everyone's okay today. Without further ado, let us start our quiz. I hope you guys are ready. On your on engine issue. Give me 1 second, guys. Push my way down. Should be something is off. Give me 1 second, guys. I think I got signed out. Let me share my quick screen very quickly. All right, guys. Good luck. last 2 minutes. Last one, good. All right, time's up. Let's end this game and move over. All right, good job. We have a new leader on the board, Marielle. Although a familiar name already. Congratulations, Marielle. And then Regina, new name, also gone. Adele, a familiar name. Elmer, I don't see you quite often on the top 10. Good job. Josh Shane, our top one yesterday. King, a familiar name. Paul, also familiar. Al Karim, who's Al Karim again? Huh? Ah, okay. And then Lloyd on top 10. Good job, Lloyd. I didn't know you have it in you. Just kidding, Lloyd. All right. Good job, guys. What was your impression of the quiz today? How was it? Just okay, so, or all right, go ahead, Paul. Yeah, you should be proud of yourselves. Marielle, Regina, Dawn, Adele, Elmer, George. Actually, a lot of you got a perfect score. I was gonna read it. Oh no, sorry, I was reading the wrong thing. So Marielle got perfect score. Dawn as well. The rest got 14. All right, good job, guys. All right, so let's go ahead and review and see you guys, or see you guys can say where you got confused or which items you got incorrect answers on. Okay, bear with me 1 second. All right, so 68% accuracy. Yesterday, I think we had 71. Was it more difficult than yesterday? I was expecting it was easier because we had a few slides yesterday. And dividends not too. All right, fair enough. Interest may be simpler than dividends. Okay. Where's the questions? There we go. So question number 1. A lot of you got this wrong. Box 1A of a 1099 div is ordinary dividend, and box 1B is qualified. How do they relate? So a lot of you answered they are 2 separate dividends. They really are not separate, right? They're not separate because there's only one dividend income, right? It's just that the qualified dividend is already part of the ordinary income. They're just taxed differently. Okay, so there's not 2 different dividends there. It can be confusing, guys. But the answer there is box 1B sits inside box 1A, okay? Because it's already part of the ordinary dividend. It's taxed differently. Okay, so this is the part where you have to be a really good exam taker. Okay, don't just look at the one choice. Look at everything. Like look at all four choices and select the best one. All right. Number two, a 1099 div shows an ordinary dividend figure and a smaller qualified figure. What is the income? So there's only one income. That's the ordinary figure. Okay. With that said, you cannot have a box 1D that is greater than box 1A. Okay, so there cannot be a greater qualified dividends than ordinary dividends. Makes sense? So if the ordinary dividends in your box 1A is 1,000 and your box 1B says 1,200, that something is wrong. Okay, it cannot be. So no broker statement is going to give you that, but you may make a mistake of doing that, right? Like a typographical error where you input or you interchange the numbers. This is the software where will alert you. Okay, you wouldn't be able to e-file the return because it's going to prompt you to fix the problem. It's going to tell you that box 1B cannot be greater than box 1A, or it may say your qualified dividends cannot be greater than your ordinary dividends. Make sense? Because 1B, again, is already part of 1A. All right, so number three, you forget to enter box 1B. What happens to the return, right? So what happens to the return? All the dividends are taxed at the ordinary tax rate of the taxpayer. The ordinary tax rate referred to whatever is the tax bracket of the taxpayer. Okay. So good job on this one. Also number 4, 77% got it right. So box 2A shows a capital gain distribution. What holding period does it get? So regardless of the dates, capital gain distribution on a 1099 div will always get treated as a long-term capital gain, right? You may ask, what's the difference between short-term and long-term? That's a question that we will be able to answer today. Okay. Number 5, which form does a capital gain distribution never touch? Okay, so we're talking about a form, so the schedule no longer apply, right? Form and schedule, they're two different things. So form 8949. So 8949, that's a topic that we're going to tackle today. That refers to the broker statements. All right, question number 6. Box 3 of a 1099 div shows a non-dividend distribution. What is it? So it is the return of client's capital. And in relation to that, number 7, a client keeps taking non-dividend distribution. What happens once basis reaches 0? That excess becomes taxable as a capital gain. Okay, that is why taxpayers who are engaged in investments a lot are tracking their basis. All right, number 8, very good. Everybody got this right. When in ProConnect, where in ProConnect do you enter a prior year capital loss carryover? Good job. That is under dispositions, and there is a link that you can click that brings you over to the carryover input form. And number 9, everybody or all except one got this right. Where do you find out that a client has a capital loss carryover at all? So that would be in the prior year return. A 1099B will never show you a capital loss carryover. It's always for the current year. Okay. Number 10, what does a capital loss carryover were due to this year's capital gain distribution. So a capital loss will offset a gain, okay? And that will get reflected on the Schedule D, right? So capital loss offsets capital gain. It's not ordinary dividend, okay? Number 11, entering foreign tax paid. Which income category do you select? All right, I highlighted this yesterday. It's the passive income category. Okay, no other selection made on that section in 1116 or the foreign tax paid. Number 12, a 1099 div shows the foreign country as various. What do you enter? So you follow whatever it is in the form. You also enter it as various. Good job. So if it's a specific country, then you input the country. But it's very rare, right? That a country is specified. It's almost always various, or sometimes RIC. Number 13, what is the difference between a credit and a deduction? So a credit is a deduction on the tax itself. So it reduces the tax. But a deduction is how do you say this? Deduction is we just should we just say it comes off of the taxable income. So it deduction reduces taxable income, whereas a credit reduces the tax. All right, number 14, which schedule carries the foreign tax credit through the form 1040? So that would be Schedule 30. That's what we saw yesterday, right? The very first line item on Schedule 3, that's on top, right? Line item number 1 on the Schedule 3. Schedule 3, as we tackled yesterday, is about credits, right? Credits, additions and credits. Schedule 1 is additional income and additional deductions. Schedule 2, we'll talk about some other time. And then number 15, a client has a very large capital loss carried forward. Can it all be used this year? The answer is no. We also talked about that yesterday. That is limited to 3,000. Whatever is the amount, however much that is, gets carried forward to the following year. Okay. All right. Any question on the quiz? Clarification? Reaction? All right, maybe the confusing word. Words sits inside. If it were worded as part of maybe the okay, right? It's the wording, but it means different. The same thing, doesn't it? If it sits inside, meaning it's part of it. All right. Paul, is there a class tomorrow? I'm actually considering. We want to take a break because I need to meet with the team tomorrow. But let's see if we're able to cover 2 things today. As I look at the material, 1099B, the one that we have for today is very simple. If we are able to finish on time, then we can include for the session today, a consolidated broker statement. All right. And then tomorrow, and over the weekend, maybe I can instead give you an exercise when put or create a client that will have W2, 1099 INT, div, and capital gains. Okay, so that you can practice. All right. Question from Sheila. Hi, Chris. If the capital loss carried forward this year is lesser than the capital gains this year, can it all be used this year? Yes. So if the capital loss carried forward this year, yes, it will definitely get applied to the capital gain. So the capital gain is bigger than the capital loss, everything will be used. Okay. Good question, Sheila. So, Dami, how to verify the details in the transcripts is correct? Is there any checklist that is required to be obtained from the taxpayer? So, Dami, why are we talking transcripts now? Where was this question coming from? I'd like to know. So the answer for 15 is C. Okay, maybe the clarification from Sheila is on question 15. A client has a very large capital loss carried forward. Can it all be used this year? The choice C, yes, but only against capital gains. Good spot, Sheila. Yes, actually, I would agree. Answer to question number 15. C is a better answer. Because if there is a huge capital gain, so for example, the capital gain is 15,000 and the carry forward loss was 14,000, then the capital gain would be reduced to 1,000. Okay, so really good spot, Sheila. Let's clarify question number 15. Although it's not too clear, but between option letter B and option letter C, C is a better answer. So yes, but only against capital gain if the capital gain is bigger than the carried forward loss. Okay, because the question is kind of vague as well. Right, good job, guys. To the how many who answered C? 11. Okay, good job. So yeah, again, to clarify, if the capital gain is so much is bigger than the carry forward loss, the entire carry forward loss gets absorbed. Okay, so it's not limited to 3,000. Right, it only is limited to 3,000 if there is no capital gain to offset it against. Did I make myself clear, guys, or some were confused? Okay, so if I may expound further, for example, in 2025, the gain was 2,000, okay? But the capital loss carried forward was 5,000, right? So 5,000, sorry, no, 6,000. Let's make it 6,000. So if the carry forward loss from the prior year, okay, was 6,000, and this year there was a capital gain of 2,000, right? So 6,000 loss minus 2,000 gain, you still result to a net loss of 4,000, correct? So only 3,000 of that 4,000 gets applied on the return, okay, as a loss. The other 1,000 gets carried forward to the following year, okay? But if the case is the other way around, wherein the loss from the prior year was 2,000, and then the gain this year happens to be 6,000, then there is a net gain of 4,000, okay? So the entire 2,000 gets absorbed, okay? In another example, for example, the carry forward loss from last year was 40,000, right? That's a huge amount. 40,000 carry forward to 2025. But then your capital gain for 2025 was 50,000. So the entire 40,000 gets offset against a capital gain of 50. So overall, in 2025, you actually have a capital gain of 10,000, right? So that's what it means on question number 15. All right. Yes, plus one gazelles. All right, that was just for bragging rights, guys. So that should be okay. But the question remains, can it be used this year? Yes, a huge capital loss can be used this year. Let's just say qualify the question, provided that there is enough capital gain to absorb it. Okay. But if there is not enough capital gain, then whatever remains above 3,000 gets carried forward to the following year. So in our example of 40 and 50K, no carry forward to the following year anymore, right? Because the entire 40,000 of capital loss was already absorbed in the current tax year. Make sense? Yeah, I think we can do better. The question could have been better, all right? But in the absence of a qualifying statement, the best answer is letter C. All right, let's settle that, guys. But as long as you understand the premise, okay, you understood that the cap of 3,000 only applies when there is no capital, enough capital gain to absorb it. Okay. All right. So with that said, let's continue with today's session. I'd like you, if you guys were able to download all the materials shared in Google Classroom, to start opening the document, which is the 1099B from Meridian Transfer Services. Okay. So 1099B, I would suppose, would mean B is broker. Okay. So this is from a broker statement. All right. So if I may share my screen again, let me see here. And while I'm also opening my files, if you could simply, or if you could also open up your ProConnect so you can follow along with me. All right, so before we proceed with our presentation, I'd just like you to take a look at this broker statement. It's very simple, guys. There can be complex 1099Bs, but there also could be very simple, like this one, similar to what we have right now. Okay, so right, so you guys see my screen, correct? So again, when you're looking at a tax document, make sure that you look at the year, make sure that it relates to the current year that we are working on, and the payer, and then take a look at the recipient, right? It only shows Gregory's name. Therefore, this is the primary taxpayer's document, okay? So you have to reflect that in the tax software accordingly. And some broker statement would show clearly what is short-term and what is long-term, okay? So in this case, it does not give us a clear identification of boxes because apparently there is no short-term gain for this one, okay? So you just have to refer to the boxes, right? So according here, short-term transactions would be on box A, B, and C, right? And then long-term would be on transaction on boxes D, E, and F. So if you take a look at these transactions, the first transaction from Pacific Grid is on box D, and then another shares from Pacific Grid on box E. So that means these two transactions are long-term, okay? But then again, some broker statements, they would clearly indicate whether those transactions are long-term or short-term. But in a case where it's not clearly identified, look at the code, okay? Any code that starts with D, E, or F, those are long-term, and codes A, B, and C are short-term. Okay, so I hope you have that document open. Now, So for our presentation today, just so we are guided. So today we are gonna be covering line 7 of the 1040. Okay, so far we have covered line 1, line 2, line 3 yesterday. This time we're doing line 7. So we're skipping some lines, okay? Don't worry about it because those lines 4, 5, and 6 we're gonna cover next week, okay? So line 7 refers to capital gains. No longer foreign to you because we've covered a little bit about capital gains or the Schedule D in the previous sessions. All right, so where we are so far as the Whitfield's return, again, line 1, 2, and 3 we've covered already, and then Schedule D that already exists because we had a capital gain distribution from yesterday, and then we also enter the carryover that we had from the prior year. Okay, so what we're gonna cover today is to answer the question on how a sale becomes a gain. We'll be familiarizing ourselves with the terms proceeds, basis, as well as holding period. And then the form 8949, what is a covered and non-covered security. And we already did this yesterday, the 2024 return that contributes to this year's return. This was referring to the carryover. All right, so there's very short amount of time that we're going to be spending on each of these because again, I'm hoping we can cover the consolidated broker statement. All right, so what a capital gain actually is. So proceeds minus the basis or the cost is actually the gain. So basically how much the security or the underlying security was bought, that's the cost. And then how much it was sold for, that's the proceeds. The difference is the gain, or it could also be a loss, right? So proceeds, again, is the amount that you sold the underlying security. And then if there is a commission, we take that commission out, but don't worry about it because in broker statements, it clearly identifies how much is the proceeds. You don't need to figure it out. It's clearly indicated how much is the proceeds. Now, the basis or the cost, this is the amount that you paid plus any reinvested dividend, less any return of capital. This is the cost, okay? Usually it's very straightforward. How much you paid for it, that's the cost, okay? And it's also indicated in the broker statement. Is it all the time? Not all the time. Some cases, a broker statement would not show the cost. Okay, and if that is the case, then we would need to do something about it. And that's actually one of our example today. In one of our transaction in the broker statement that I just showed earlier, the second transaction did not have a cost. Okay, does not show a cost, and it's not uncommon. All right, so again, the gain or loss is the difference between the proceeds and the basis. You don't need to calculate this really. The system will do it for you, okay? And the broker is also doing it for you. It's just a matter of us entering those in the right input form. All right, so the holding period, anything that is held for 1 year or less. So again, 1 year or less, it's short term, okay? And then anything that's more than 1 year, it's already considered long term. So how do you count the days? So that's the day after the acquisition. So if the security was bought, let's say August 20, 2025, then the counting of the holding period will start the day after, August 21, 2025 until August 21, 2026. Okay, that would be the holding period to be considered short term. If the security was sold a day after the 21st of August 2025, or sorry, 2026, then that would already be considered as a long term. And why is it necessary to determine whether, why is it necessary to determine the holding period? Because the tax rate differs. Okay, short term is taxed more, right? It's taxed more because the rate that is being used is the ordinary rate of the taxpayer, which is, if I'm not mistaken, the minimum tax rate for a taxpayer is 20%. And depending on the income level, it can go higher, as much as maybe 35%. Okay, so that's the ordinary rate. Long term can be as low as 0 to up to a maximum of 20%. So there is a favorable rate if it's held long term. Okay, so in the case of Whitfields, why is it important? Because the ordinary rate for these taxpayers are at 22%. Okay, and if they have a short-term gain, then that would be taxed at 22%. Long-term would be at 15%. Okay, so that is why the acquisition date matters. And this is why you have the broker statement. The broker statement will take care of this for you. Okay. Now, I've shown you already the 1099B. Let's just take a look at those numbers. So on box 1A, you have the description. So the number of shares, and then the name of the stock. And then on the second row, you had, for the second box is the date acquired. And then the date sold after that. And then the proceeds, the cost, as you can see, the second row had blank. And then on the box 8949, one was coded D and the other one was coded E. For code D, that means the basis was reported to the IRS. Code E, the basis was not reported. Okay, so the basis when this was bought, okay, when this was bought, it was reported by the broker, but it was not monitored. Okay, so there could be a case wherein, in some cases, they switch broker, right? Or there was a change of hands or change of ownership. Now, covered versus non-covered, brokers have only been required by the IRS to track basis since 2011. So anything bought before that is non-covered. So box 1E is blank and the broker reports proceeds only. So that means because they're not required, although some brokers, even if it's non-covered, they still track the basis. But there are cases wherein, for example, E-Trade. E-Trade is a broker. It was bought by Morgan Stanley, right? So in the case, in the process of them recording the transactions, some information may have been missing, right? And if the cost was missing, if the broker determines that it would take a lot of resources to track the cost, they just don't record them anymore, especially if that stock involved was bought before 2011. Okay, because they're not required by the IRS anyway. But what the taxpayer can do is track, right? That's the responsibility of the taxpayer to track the cost. Okay, can he make an estimate? Yes. If he cannot track the cost anymore, he can estimate for as long as he can support it, right? Like in a form of a bank statement, maybe an archive in an email, a receipt, for example. He can do that. Okay, if he's really cannot recover the cost, or he can. What we also do in practice is we ask for the date, right? We ask for the date that it was purchased. If he can't give us a date, give us an estimate of the date. right? And then we look it up in Google, right? If it's a publicly listed stock, we can get the information online. And then we just put that as a, part of the work paper, okay? Because the worst thing that we can do is put 0 on the cost, because if there's 0 cost, that means everything is gain, right? So all of the proceeds are considered gain, okay? And we'll talk about that in the next slide. All right, so box A, short term, this is, we're talking about the codes in the 8949. So box A, B and C are again short term. So A would be if the basis was reported to the IRS, and no would be B, and then C if there's no 1099B at all. So this is rare, but I've seen this lately, especially when it comes to digital assets like Bitcoin, for example, because it's only been recently that this digital currencies are tracking or making formal their transactions, right? But back in the days, it's very, I would say, disorganized. So there's no specific form that tracks the basis, that even tracks the proceeds, or document that shows the transaction, because a lot of these are happening in the black market, right? So when it comes to digital asset, most of them are not reported on a 1099B. That means that these are not reported to the IRS, right? Because there's no formal documentation involved. So again, when it comes to digital asset, they usually fall under box C or box F if long term. Okay. Now D for long term and E for long term. D if the basis was reported to the IRS, and no if not. And again, F if similar to a digital asset. All right, so why did the IRS splits them this way? Where basis was reported, the IRS can match the return against the broker's figures. Where it was not, they cannot. So those transactions are segregated and get more attention. So, when we file the return, the IRS has, software that can match transactions, right? Because the broker provides the investor the 1099B, and they also do the same thing to the IRS. So all that the broker receive, a copy of which is also given to the IRS. So when we file the return, it's easy for the computer to match those transactions, okay? And if there are transactions that were not reported to the IRS, the computer will just simply segregate it. And then, there is an algorithm that's designed to capture anything that may trigger an audit, right? Or if, say, for example, the code was B, C, E, or F, and the amounts are, significant and unusual, that could trigger not necessarily an audit, but a notice from the IRS asking the taxpayer to get more, to provide more information about the transaction. Okay, so that's pretty much how it works. Alrighty, my mouse is acting up again. Give me 1 second, guys. All right, it's working. Thank you, Golly. All right, so netting the limit and what is sent forward to the. Was there a short-term gain? I'm not sure. I think this one's. Let's skip this slide. This is confusing. So let's just go and check on the transaction that we have based on the 1099B. So again, we don't have short-term transactions on this 1099B. We only have long-term for both. Now, we don't have a cost, right, for this second transaction. The transaction that was sold on July 15 and the proceeds was 6.9. We don't have the cost. So if we don't have the cost, guys, if we say zero, that means this entire 6,900 becomes a gain, right? But is that proper to say that there's no gain or there's no cost? What do? We ask the taxpayer, right? If he can provide us with the document. But did you guys check on the tax organizer if there was information that relates to this? Check your organizer, guys, and see if there was an information that relates to this transaction, because it may be there, right? So lesson is that when we see something strange or something missing on a document, do not be quick to send a communication to the client. Check if there can be anything that you can find in anywhere that or anything that the taxpayer submitted, because we don't want to receive a response from the client that say, hey, I already provided that information to you, right? Because that means, we're not being thorough. Okay, so check the tax organizer, guys. Do you find something that it relates to this transaction? All right. Is that only what it said? All right. Charm says they paid for 150. Good. So we have that information. The 150 is the cost that was paid by the taxpayer. Okay. So we didn't have to ask the client, right? Because it was already proactively provided in the tax organizer. All right, so time check is 7:55. Let's go on a water break. Let's be back at 8:01. And then get your ProConnect ready so that we can start entering the broker statement. All right, guys.
people higher and open wider sky. Skills without borders, careers without limits, borderless accountants. We built a dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. If you've been waiting for a sign, here it is, come on in. You've got what it takes to thrive, and we're with you to the end. For every goal you carry, for every room you want to fill, we'll help you stand with confidence and turn your vision real. Skills without borders, careers without limits, borderless accountants. We built that dream in it. Skills without borders, careers without limits. You belong right here, and we'll help you live it. Skills without borders, careers without limits, borderless accountants. This is what we're made for. From every corner you can come. Bring your story, bring your hopes. We'll meet you where you are and help you learn to grow. With US books and tax prep, we make the path feel clear. Step by step, we build the way so success can start right here. Hands together, hearts aligned, a place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless accounting. Place to learn and rise. We lift our people higher and open wider skies. Skills without borders, careers without limits, borderless.
All right, guys, welcome back. All right, so now let's input our 1099B into ProConnect. And you guys can see my screen, right? So I'll go to tax returns, open our client taxpayer. So since this is income, we still have to input that under income field, particularly under dispositions, okay? So as you can see now, this position is in bold because we already input some information there, particularly our carryover. Okay, so in here on the details, or we click the details to expand and get the form, the entire form view. Okay, so we'll have to familiarize myself with how it's done in ProConnect. Okay, so what we'll do for now, we'll enter it as provided by the software. So let's say quantity, that means the number of shares sold, right? And then the description would be this one, right? So the name of the underlying stock. And then here, date acquired, the date acquired. If it is specifically stated, you can put the date. If it's multiple dates acquired, because some they just lump it in one line and just call it various. Okay, but for this particular example, we're given the date, so we input the date. Okay, so this is 03/12/2015. Again, for US, it's month, date, and year. The date sold, it's also given. So we put that July 15, 25. All right, so the sales price is the proceeds. Okay, the proceeds is 18,400. The cost is 11,200. And then usually we don't deal with this because it's pretty much same with federal. And then we know that this is for Gregory, so put this as, or tick this box, the taxpayer. And then that's it, right? So we're done with the first line and we go with the next. Okay, so also Pacific, but 150 share. And then because this is various, what we do is we put a negative date. Okay, because this is long term, right? You cannot put a date that's 2025. Okay, so it has to be a date that would also demonstrate that this is long term. Long term is anything more than a year. Okay, so what I would typically do is this is arbitrary. Okay, depending on the firm's practice or depending on the judgment of the preparer. But if I'm preparing a 2025 return and I want to show that this is a long term, I will just use a negative date, which is January 1, 2024. Okay, it could be any date, any year, any date, for as long as, again, it would indicate that it's a long term. And then the date sold is given. So let's say, all right. So for example, the date is not given. It also says various, which also happens. So what I would do is I put a negative date, and I always use the last date of the year, right? So instead of saying various here, you put a date. In other software, you can type various, okay? In some software, but ProConnect is not designed that way. Okay, so you have to follow the instruction in the software. Again, in some software, you can just simply say various, right? But in here, you're not allowed to type in a text, right? So that particular field is designed for you to enter a number. So for this particular example, we have a date. So July 7. Oh, sorry, July 15. 25. The sales price 6.9. And then let's see what happens if we don't put any cost, right? Because we're not careful, we just put no cost. By the way, this is also for the taxpayer. We need to indicate the box, okay? So let's see where that box is for ProConnect. Anyone who can help on this? Box 8949. Okay, maybe. Let me tell that. 8949. It doesn't say. Let's see if we can get the miscellaneous information. It's under miscellaneous. All right, I'm just not sure if that is, if in ProConnect, you can ask for the box, but it should be, because this matters when it's reported on the form. Can you guys research, type in ChatGPT or somewhere where to input the box code for 8949 in ProConnect? There should be. Right. So without that, while waiting for that research to come, guys, let's open the form. So I'll show you where that would go, okay, on the form. All right, because it's a capital gain, again, it's going to go to Schedule D, right? So Schedule D, yesterday we got ourselves familiarized with capital gain distribution from a 1099-D, or sorry, from a 1099 div, and the carry over, right? This time I'd like you to bring your attention to this one, part 2, or sorry, part 1 for short term, but in this example, we don't have a short term, right? And then you see here, you have 1A, 1B, 2, 3. This is the box. This is where the box matter, right? Because 1A would be for A, and then this one, no, this is a different. So sorry, 1B would be for box A, 2 would be for box B, and then 3 would be for box C. Same with long term. So see here, it's lumped under 8A. It should not be the case because this is box D. The first transaction should fall under 8B, and then the second transaction should fall under line 9. So something is off. Let's fix that. Are you guys able to locate? Let's see, Schedule D. Oh, okay, here. So on Schedule D, you actually get to see here the box, say, reported on, if it's blank, that means the 99B basis to IRS, 1 equals the 99B basis not to IRS. So if you put 1 here, let's see what happens. Let's refresh the form. All right, so that first transaction now goes down to line number 9. Which is total for all transactions reported on 8948 box E or box K. No. Because we know that 18400 is box D, right? So that box D should go here, 8B. So what does it say? Reported on blank, blank equals the 99, B basis to IRS. 1 equals basis not to IRS. Okay, sorry. So this should be blank. And I think that the other one should be, this specific grid should be 1, because 1 says basis not reported to the IRS. Okay, so this should be 1 here, so that if we refresh this, that other sale of 69 should go down here, right? Box E 69, but we don't have a cost yet because we didn't enter it. Now our problem is that 18400 should go down to 8B. Okay, let's figure it out. How do we make it go down to Okay, I think this is similar. This 8B and 8E is pretty similar because it says here total for all long-term transactions reported on the Form 1099B or Form 1099DA for which basis was reported to the IRS. So that should be okay, guys. Right? The important thing is we were able to segregate those that are those for which the basis were not reported to the IRS. Okay, because again of the matching, right? This one will get automatically matched. This one will not. Okay, because the cost for this stock sale was not reported to the IRS. Right. So again, if you did not input, you were not being thorough here, and you did not report the cost that was indicated by the taxpayer in the tax organizer, notice what happens. The entire 6,900 becomes taxable as a gain. Okay. So now we go back to that particular stock sale and we indicate the cost. Okay. How much was the cost? So if you were lost, go to general information. Okay. The general information, the cost was how much? For 150. Okay. So for 150, now you refresh your form. So that is what it says there. For 150 cost. Now your taxable gain for this particular sale is 2750. Again, the reason why we're separating them clearly is that this sale was reported to the IRS, both the proceeds and the cost. But the second line, the 4150 was not reported to the IRS because in other terms, that was a non-covered transaction. Okay. Copy so far? So with this, your total gain is 72 plus 2750 plus that 865 less your 38, which was your carry forward loss. Now your net long capital gain is 7,015. This was the line item that we, or the question in the quiz earlier, the line number 15, right? This was a good example, or this is a good example. So that capital loss of 3,800 is fully absorbed. Okay, it is fully absorbed. So if you go to 1040 now, on line number 7A, you got 7,015 gain. Okay, 7,015 gain. The entire 3,800 of carry forward loss from 2024 was fully absorbed. Okay, so it was not capped at 3.8, it was fully absorbed. Make sense? So if you want to go back, go to Schedule D. See that 3,800, again, the carry forward loss from 2024 is fully absorbed because we had more gain in 2025. Copy? All right. So that's the premise of that. And then, guys, if you make a mistake of putting here as 2025, see what happens. Okay, that's why it matters, because for ProConnect it doesn't give you unless you override here. Okay, unless you override here. But if you use this information here and you make a mistake of putting 25, notice what happens. It moves to short term. Okay, it moves to short term. And that's 2750 is now taxable at the ordinary rate. So the impact of that, if you go to your 1040, the tax, can you put this in the chat box? The tax is, total tax for this taxpayer is 9,666, right? It's slightly higher than what it should be, okay? So if we put it back to 24, because this is long term, all right, the tax is slightly lower, 9,336, right? It's lower by $30. Why? Because again, the long-term gains are taxed at a preferential rate. Okay, So all these gain are taxed at a lower rate, slightly lower rate than the 330 savings. Good. So not 30, I'm sorry. Right. So it's a lot of savings, right? It's a lot of money, 330. So you don't make a mistake of encoding transactions. That's why you have to review your work, right? Because you may say, oh, you're done inputting everything. But if you don't know how to review your work, the impact of what you do, you're actually, again, unknowingly misreporting the tax due of the taxpayer. Okay, so that is why this matters here, right? One thing with ProConnect, same thing with Lacert, is that you can go away with this date, right? You can do away with this date. But if we do that, let's see what happens. If we take away the date, let's see what happens. Maybe there is a default, I'm not sure, right? The default is short term, right? If you don't indicate a date. Same thing here. If you go with the first transaction, if you don't put a date, they would default to short term. And again, the problem with that is that short term gain are taxed at a higher rate. So look at the tax. It went up to 10,182, right? So it should only have been 9,330, right? But because you incorrectly classified or encoded the transaction, this taxpayer is unnecessarily paying more taxes than he should. Okay. Let's see if that actually prompts an error in in the diagnostic. All right, see here, this position number 1, it says date acquired missing. So the software is smart enough to notify you that something is missing on your input. So if you click on view input screen, it's gonna send you back to that input form. Okay, so it would not allow you to file the return because something is essentially missing. Okay. Okay, why is that? Right, I'm gonna get there, guys. Why is it taking so long? Come on. Maybe when a lot of us are accessing ProConnect at the same time, it slows down. Right, you guys are following me, right? This is interesting. So you should not be missing this because, again, simple mistake can cost money. Okay, it could be overtax or undertax. God, what is this? So as we go along, we will be giving you sample returns with slightly more complex tax documents. But for now, let's do with the basic, okay? So because not everybody is experienced, let's start with the basic because there are more complex 1099B, okay? But this one, the one that we're using is very, very simple. Right, the capital gain, no, the loss, only the loss, Lawrence has a cap, okay? The premise for that is that for those who are trading stocks, right? The IRS is avoiding them from paying taxes, from not paying taxes, right? Because what if they have so much loss to claim, that if the IRS allow for the entire loss to be claimed against all their other income, they end up not paying taxes anymore, right? So it could be used as a loophole by, you know, those who are invested in the stock market. So to prevent that from happening, they put a cap as to how much they can deduct from their other income. And the same thing with other losses. Like you will later on learn about losses on real estate. There's also a capping, right? Because most of the US taxpayers are invested in stocks and real estate. Okay. So if they're engaged in rentals, not all rental losses can be used to offset other income. There is a limitation. Okay. Because if that happens, the IRS will not have anything to collect from taxpayers, right? Where is it? So if we go back to the details, so there is a quicker way if you want to avoid entering dates here. What you can just do is do an override, okay? So you can say here that this is number 2 for long term. And then where's the other one? This one can also be an override of 2 for long term. And then see what happens, okay? Refresh. Sorry. Right, so with the override, it went back to long term, okay? And then if you go back to check return, that diagnostic error should be gone. Let's see. Right, so those 2 diagnostics that relates to missing date of acquisition is gone, okay? So that's more convenient. So you can use that, okay? That's what most firms use because it's awkward to put negative date, right? But again, not all software has this. In some other software, you can simply type in the word various, okay? All right, so I guess that's about it for the 1099. Again, don't forget about the codes because that's what's gonna set apart your breakdown. Okay, it is gonna give a breakdown of your transactions according to the boxes in the 8949. If you don't, it's gonna be lumped. Is there a problem with that? Not really, because the tax will be the same, right? The calculation of tax will be the same. But the IRS may send you a notice because when they match these numbers, it's not going to be the same, right? Because you will, if you lump this would amount to how much? 28,300, right? So the computer will flag this transaction because as far as the IRS is concerned, they're only expecting a proceeds of 18,400 and a cost of 11,200. But what you reported in the tax return is a total of this, okay? So that can cause a computer-generated notice that would have been avoided if we did the right thing when we prepare the return, okay? Makes sense so far? So those are purely administrative, okay? No impact on tax return, but unnecessary work on the part of the IRS and unnecessary work on our part, because when the taxpayer receives notice, they would not know what the notice is about because they're not tax professionals. So when they receive the notice, they will send us an email and attach with it the notice, and we will have to respond to that notice and say, hey, no worries, we can, that's unnecessary work, right? That could have been prevented if we did the right thing the first time. Okay, so that's it for the 1099-B. I think we have time to go through the consolidated broker statement and maybe answer this question on the slide right now. I'll show it to you guys. So the question is, Gregory's 1099B shows 6,900 of proceeds on the drip shares with box 1E blank. His own records show he paid 4150. What do you enter? Okay, is it A, 6,900 of proceeds and no basis because the broker did not report one? Or is it 6,900 of proceeds and 4150 of basis in box E, giving a 2750 long-term gain? Or is it C, nothing? A non-covered security is not reportable. And letter D is at 2750 of proceeds, since that is the actual gain. What is your answer, guys? Type it in the chat box. All right, so answer should be letter B. It's not D because you do not net, okay? And it's not C because that's a completely incorrect statement. From Shirel, if you do the override, does that mean you don't have to input the basis in Schedule D? You still have to. The basis will have to be reported. Otherwise, the entire proceeds will be considered as gain. Okay, so the override is just for us to classify that that gain is either a short term or a long term. Okay, can we include in a discussion the topic of wash sale or other session? Yeah, maybe some other session. This is more advanced, Chris. The one, but good point. Okay, good point, because a wash sale can occur and can happen in a broker statement, but this we'll do it in a more advanced session. Okay, let's not do adjustments for now. Okay, so that's your broker statement. And again, this is reported on your Schedule D. Okay, and what is in Schedule D ultimately rolls up on the 1040. Where is it? Line 7A. Okay, so far, guys, we have covered 4 lines in our income section in our 1040 form. Okay, what are those? Line 1A for wages, line 2A for interest, line 3 for dividends, and line 7 for capital gains. What we skipped are line 4 for IRA, 5 for pension, and 6 for Social Security benefit. These are for next week, okay? And after that, we're done with the line item all the way to number 7. The additional income on Schedule 1 would be on another session, okay? Because this is uncommon. And if you prepare a return that involves other income on reported on Schedule 1, this is advanced, no longer basic return, okay? So when you're pricing a return, okay, when you're preparing a return, anything that involves only one line item 1 to line item 7, these are basic, okay? So these are very cheap return. You know, you can price it to 100, 150, 200, depends on the software that you're using, okay? Because again, when you're pricing a tax return, you have to factor in the cost of filing it, okay? So if you're using someone else's software that already has an IFIN and can file unlimited return, then you can price it cheaper. But if you're, especially if you're using TurboTax, you have to research first how much to file a 1040 return in TurboTax, and then whatever the cost is, you adjust your rate, okay? So if your rate is like 100 for that simple return and TurboTax will charge you 100 to file, then make your cost 200 or make your rate 200 to file that return, okay? But again, if that return would only covers line item 1 to 7, that's considered simple return, okay? Anything other than that, that covers Schedule C, Schedule E, because all those schedules will come under Schedule 1, okay? Other income and other deduction, those are complex. And some preparers, they charge per schedule, okay? So a separate schedule, separate fee for Schedule C, separate fee for Schedule E. And some taxpayers even have multiple Schedule C, right? So they have two LLCs, for example. They have two rental properties. Some could have a Schedule C and a Schedule E at the same time. So those are complex returns and you have to price them appropriately as well. Okay, so enough with that. I'd like you now to bring up the consolidated broker statement, which is document number 6 on the material that I shared in Google Classroom. So that consolidated broker statement should look like this, guys, okay? So the reason why it's consolidated is because it brings together your INT, dividend, and capital gains, okay? So as you can see here, page 2 is a breakdown of your interest and then your dividends. And then the last page is your 1099B. So all of this is reported under one account. And if our 1099B for the share of sale of stock was for the primary taxpayer only, the consolidated this time is for the joint filers, okay? So why is it consolidated? Because it covers all three income, interest, dividend, and capital gains in one single statement, okay? So let's just make sure that the other Pacific grid is marked as, okay, so both are marked for just the taxpayer. Okay, so now let's input them. This first page is the summary, okay? So you can scroll down and go to the pertinent document. Let's go back to our interest. I hope you still remember where to go. And when you're doing interest, you go line by line, okay? This is what entity? Meridian. Right. Then click on the details. Right. And then this one is joined. And then the amount of the interest is 412. There is interest on savings bonds. So these are US bonds here. Okay. And then there's also tax exempt interest. It doesn't say if it's municipal bonds, but usually tax exempt interests are municipal bonds, or in other parlance, it's also called munis, MUNIS. Okay. So that's for the interest. And then for the dividends, go click again this entity. Oh, what is this? Just give me 1 second. Let me just copy it from here. And this is again joined. If it asks for an EIN, input the EIN. If it doesn't, that's also okay. And there's also qualified dividends. Again, when you're entering information, guys, do not skip, okay? Go line by line so you don't make a mistake of missing important numbers. Because by now you already know. If you miss this 1205, what happens? If you miss to input 1205, what happens, guys? Say that again, Kelly. overtax. Extra tax. And then this capital gain, what is it? Short term or long term? Good. And then there's foreign tax of 86. So foreign tax 86, you have to go down. We've already shown you this yesterday. So yesterday we deleted that foreign tax, right? This time we have one that's applicable to this taxpayer. This one is, it doesn't say what country. Normally, if you have a foreign tax, the real document will give you an attachment, okay? Will give you a breakdown. So let's just say various for this one. And then foreign tax is 86. And then this is from the 99. All right. So in this case, the 86 referred to the entire. The 86 referred to the entire amount earning, right? But if you have an attachment, make sure that you look for that foreign tax paid, because not all the time that the foreign tax paid applies to the total ordinary gain, total ordinary dividends on box 1A and box 1B. Could be a portion only, okay? So make sure that you have to look into the supporting document. All right, so that's for the, so we've entered all four, right? So let's just refresh this for now so that you can see what happened. We should be expecting now. Let's see if it's gonna generate 1116. Yeah, it did. Okay. So the 1116 got populated with the 86, and then the schedule 3, line 1, foreign tax credit 86, right? And then you also have that on your 1040 line item number 20, 86. Okay, so you should have that. Don't worry, guys, I'll give you time to screenshot my pro forma return so that you can check it against your inputs offline. All right, so one last thing on the consolidated broker statement is the 1099B. All right, so let's see. So 1099B, this is what I was talking earlier. Sub-broker statement will clearly identify if it's a short-term or long-term, right? So here we have short-term and we have long-term clearly segregated. So now let's go back to our disposition. And then let's just add another box over here. And then identify that this, the name of the payer again. I just like to copy paste, guys. So I'll just take this. Okay, here. So 200 from Cascade Software. Click on the details. So this is short term. We don't need to input the dates anymore. Let's just do the override. So the sales price is 7,850. Cost is 9,300. And let's just do the override, okay? Just say 1. And don't forget, this is joint. And then let's do another one. This is how much? 300, or how many? 300 of this. And sales price is 12,600. Cost 9,750. again, joint, and then long term. So everything we classified, right? Taxpayer, taxpayer, good. So refresh. Right. So schedule D, oh, sorry, hold on, yeah. So see, our short term went here, but let's see, it was the report, was a basis reported? It doesn't say, right? Yeah, proportions. Oh, okay, here, box A, and then box D, okay? So we didn't have to specify because there's no need, right? Because like here, you don't know how to go here anymore. Fill this out because this were reported, okay? So box A, box D, this is the form 8949, okay? And let's refresh. So this is the time where you will be doing a screenshot, okay? All right. So let's go back to the 1040. Your page 1 should now show these amounts on line 1A. It should be the same, okay? It cannot be not the same because otherwise that means your W2, you'll mis-enter those. Interest, we covered that a few days ago. Dividends, we covered that a while ago, also yesterday. And then today we just covered capital gains, 8755. So if you can do a screenshot. So far as of today, our adjusted gross income or our AGI is at 133,722. Okay. And then page 2, we'll cover this in more details. Okay. But for now, you see the standard deduction is at 33,100. Our additional deduction, because one is age 65, above 65. So total standard deduction is 39,100. Taxable income, that's our AGI less our standard deduction, is 94,622. And our tax as of today is 9,444 less the foreign tax credit of 86. Your total tax as of the day is 9,358. Because there was a withholding for the 2W2 of 13,120, this taxpayer will end up as a refund as of today, okay? Because remember, we still have 1099Rs and SSA 1099 and some other miscellaneous tax documents that we're going to be entering next week. But this is what you should have for now, okay? If it's other than this, then that means you may have failed to input things correctly, okay? For 8949, will it only reflect the shares that are not reported to the IRS? It will report all in boxes A, B, all the stocks actually is in 8949. Let's see. I could be wrong. All right, so 8949. Why does it say only E? But it should report everything. Right, page 1. So 8949 is the breakdown of all sales. I don't know why ProConnect only shows this, but there should be multiple pages, right? Because like, see, this one is only for those that are marked E, but we have D. Okay, actually, because the we didn't have to specify D, right, or even A, because I don't know why. It's not required, yeah. So the 8949 is the attachment that we send over to the IRS because of those that are for those the bases which were not reported to them. Okay, so this is like a supporting document so that the IRS will no longer ask for a supporting document from the taxpayer. Okay, so this acts like a supporting document. Okay, because all others that we entered on Schedule D, so this one is all on Box A and Box D, and this one is on Box D. These transactions were already reported to the IRS. It's already there. I wonder why I have to Schedule 2. All right, you may have activated your AMT or check mark your AMT key code, but that should be okay. AMT is optional. As of this, for this taxpayer, AMT is not applicable because he actually gets a refund. Okay, so AMT is a separate topic. It's alternative minimum tax. The concept of AMT is for taxpayers to not escaping taxes. Okay. Annabelle, I don't have an 8949. Make sure that on your Schedule D, for the second transaction with Pacific Grid, you specify this. Okay. If you did not, it's not going to generate a form 8949. Let's check that. If we remove that, refresh our form. See, I don't have an 8949. Okay. So make sure that on the Pacific Grid transaction, the second transaction, you indicate that that particular transaction was not reported to the IRS. So this should be 1. Right? And I refresh again, it should generate the form 8949. All right, are you good now, Annabelle? So now 8949 is there. All right. Any more questions? We still have 8 minutes, guys. So tomorrow, because we're able to cover the consolidated broker statement, we're gonna skip class, okay? But I have an optional, purely optional, okay? Not a requirement. I'm not gonna post it in Google Classroom as a requirement, but I'll come up with a mock return that you can be busy, that you can spend your time entering. So just reinforcement of what we have learned so far. So W2, 1099 INT, 1099 div, a broker statement. Okay, so all these things should already make sense to you. Like it should be second nature, right? So Schedule B, Schedule D should already ring a bell when you hear these things, right? So Schedule D, what do you see in Schedule D? These are capital gains. These are stock transactions, okay? Schedule B, what do you see there? Interest, dividends, right? When do we use all assets on form? Right, I think if you would want to print all the stock transactions, where do you see this, Vernalyn? So Schedule D. Where exactly is that? Schedule first services. Okay, go down to, because I think if you do that, if you, okay, and under general information, ba? 8949. No. Here. Let's see. Because if you do one, I think it's gonna print everything. All right, so it prints everything, including all those that were reported to the IRS. Okay. So those that are in box A is gonna get attached, box D is gonna get attached, box E is gonna get attached. Okay. But it's not necessary again because all those that are in box A and box D, those are already reported to the IRS. Okay. But good question, good catch, Verna. So we can skip that. So it only prints out an 89.49 for the transaction which cost was not reported to the IRS. Okay. Copy so far? Not too overwhelming today. The 99B and consolidated broker statement. Okay. So you now know if it's a consolidated broker statement, you're expecting all three income, although it's not all the time, right? It can still be considered consolidated broker statement, but you may only see dividends and capital gains or interest and capital gains because some years they may not be dividends or some years they may not have earned interest. Okay. But it's just a consolidated broker statement because on that account has multiple subset. Okay. So, and typically when you see a consolidated broker statement, that's multiple pages. Okay. Multiple pages, and that could be advanced. It could be time consuming to input just because there's so many. Okay. And it's not uncommon, right? It's not uncommon. I got it now, Chris. Thanks for sharing that screen. I was not able to put the 3.8 on AMT long term. Okay, got it. All right, so 4 more minutes, guys. You have more questions, clarification? We're still okay, right? Based on schedule, we are a little behind. But we're good because the schedule, if you guys ask for the curriculum, I designed the curriculum for only 12 weeks, but this course actually spans 4 months or 16 weeks, right? So we have buffer. I intentionally put a buffer there because I want to be as thorough as possible when it comes to the Form 1040, right? Because Form 1040, there's just a lot of things that we need to be aware of. And it's also one form that does not require anyone to have an accounting background, right? Because if you notice, a lot of these terms are not non-accounting, except for today, where we had basis or proceeds or cost. I mean, these are very common things for accountants, but these are not hard to understand even for non-accountants, right? Basic proceeds, whatever it is that you got from the sale, right? That's proceeds, and the cost, whatever it is that you paid for it. So non-accounting terms, and these are forms that can be filled out and can be done even by non-accountants, even by people who have no I would say who did not graduate, right? Because for as long as you know what to input in a W, for as long as you know what to look for in a 1099B, 1099 div, and 1099 INT, you can prepare a 1040. Anyone who can get familiarized themselves with the form can do it, okay? So it does not require someone to have a sophisticated degree to do. But the more that we get into the advanced side of tax, that's where your educational background can come into play, especially the accounting side. But we're trying to make it, we're trying to pace it in a way that it does not overwhelm everybody. Okay. So I hope you're still okay. Robert is still coping. You will realize actually later on, once you start entering documents, that it's just a matter of familiarity, right? If you're familiar with the forms already, you'll get the hang of it, okay? But the reason why we're spending time getting to know the form, getting to know the boxes, the principles behind it, is that you don't make a mistake of going into a tax prep job and again just doing the data entry, not understanding the impact of these entries into the actual tax form. Okay. Because I have people who are working with me for several years now who were just doing data entry, guys, because I didn't have the time to go through these information. And I hope that these folks are now appreciating what they do, but what they do now, right? But yeah, let's rewatch a recorded video, Robert. Are you also guilty of feeling overwhelmed, Lou? Me having a second screen and feeling it's still not enough. Me having a lot of screen because I'm right. So it helps that you have screen, multiple screen, because you can follow along with the exercise. And I hope I'm not going too fast. Okay, I hope I'm not going too fast when I'm doing data entry, because I feel like Kiko was able to follow along, right? So although there were some lapses, but he was able to figure it out, right? So I guess I'm good with my pacing, right? All right. So again, announcement. No, let's not hold a class tomorrow. Let's take a breather. But we'll give you a little bit of assignment for you to get busy with, and then watch the recording. Next week we are gonna do the 9 hours and pension and social security benefits. So I hope you don't miss that, because it's also very common, especially for slightly more complex returns. Okay, as a preparer, you don't want to be preparing simple returns, because if you are, you're not getting paid well, right? Or you're not being paid well, right? Because anybody can do a simple return. So you have to be, someone able to prepare an advanced return so that you can price your rate better. All right. Will you upload it, Chris, in Google Classroom? Yes. I will upload the documents in Google Classroom, and it will not be graded. I will also show you in the document the pro forma return, so that you can compare your own input into what it should be. Okay. So that you would know if you're doing it, if you have done it right. All right, so with that said, it's 9:02, slightly over time, but that's okay because we're not meeting tomorrow, okay? So with that said, thank you guys for tonight. I really appreciate your attendance and your perseverance. We're almost there, okay? And to close today's session, let's have Maria to have the closing prayer. Go ahead, Maria. And before I forget, you guys have a great weekend and a productive one.
Guys, do you hear me okay? In the name of the Father, the Son, the Holy Spirit. Amen. Heavenly Father, thank you for guiding us throughout today's session. We are grateful for the knowledge, lessons, and insight we have gained, and for the opportunity to learn together. Please bless everyone who participated today. May we be able to apply what we have learned with confidence, patience, and wisdom. Help us remember the important lessons and continue improving our skills each day. We also pray for our trainer and facilitators. Give them continued wisdom, strength, and patience as they guide us in our learning journey. As we end this session, keep everyone safe and bless our families, work, and responsibilities. May we continue to support and encourage one another as we grow and reach our goals. Thank you, Lord, for a successful and meaningful training session. In Jesus' name we pray. In the name of the Father, Spirit. Amen.
Thank you, Maria. And again, thank you, guys. I'll see you on Monday. Bye for now.
Recording stopped.
What if the career you've been looking for starts with the right skills? Learn the foundation of modern accounting through U.S. bookkeeping. Build confidence in communication and stand out in the global workplace. Gain practical U.S. taxation skills used in the global industry. Welcome to the Borderless Accountants Intensive Training Program.